ಅಣ್ಣ ಮಾತಾಡ್ಬೇಡ್ರಿಪ್ಪ, ಕಾಲ್ ಇದೆ. ವಾಲ್ಯೂಮ್ ಕಮ್ಮಿ ಮಾಡ್ರಿ ಪ್ಲೀಸ್. Okay, we start considering everyone is on board. Quite an interesting closer Nifty on Friday. We've been expecting 10,900, 960 range to act as resistance, and it's been really playing hard. To be honest, this amount of resistance with one more trading session for the year to complete, one more day for the year to complete, we believe that it's tough closing 11,000 on a closing basis. Perhaps an intraday high is expected, but nothing beyond that. The entire month of December kept Nifty oscillating in a range of 10,900, 950, 970 on the upside, whereas uh, 11,000 continued to elude and act as resistance. Whereas 10,300 did give a lot of support to the markets. Yes, people have been questioning about the strength of the uptrend given that it's been monitored or driven by only 10 stocks. Having said that, we've seen Indian markets can be ruthless when it comes to stock selection, especially 2018 has been a year which uh, has given a lot of such examples that yes, the markets can be driven up with a handful of stocks. Coming to Nifty, with what does the exact short term trend for the time being look like? So we use a very small 0.35% three box PNF to gauge the trend, and we see that yes, 11,200 is an support area which will find give resistance to the Nifty uptrend, which is right now trying to break past 11,000 mark. So even if it breaks 11,000, I think things are not going to be easy. Drawing the second resistance, you will find the next resistance at 11,000. So this channel of resistance is something which needs to be overcome if one has to really see a move which can pivot Nifty to new highs. The new highs means excess of 11,760, which is the all-time high formed in the month of August. The short term picture can be very trappy. You can see these areas which are a classic sign of traps. People have gotten whipsawed, trading long, trading short, and eventually people will give up. Now the point people will give up, till August, the uptrend was quite convincing. People went long at every decline, but now you see that overall mood is to short at every rise. 11,000 is a benchmark. One will revisit 9,900, or some people have even gone to an extent to say that it will go all the way down to even 8,200, and some are even pegging it below. Hold your horses. It's not that time wherein one can say that yes, at 11,000 I see 9,900 or even below. It has to be step by step. Now, first step, till the time you break this low of 10,333 odd, which was the panic low formed on 11th of December when the state election results were announced. That is the first support. And since it's a support formed on a day of event, it becomes mighty strong, not easy to break. The day you break it, I think the picture will have to be reassessed. Coming higher on a closing basis, 10,600, 590, 630 cluster is something which will act as immediate short term support. So people who are looking to short at rises should also remember that 10,950 has been tested thrice this month. So something which gets tested thrice and eventually gives up, well, you are the one to take the risks, because then it will be a rally of a different proposition, and the first major resistance for Nifty comes at anywhere between 11,450 and 11,500. That's around the peaks of 2009 18 September. So 2018 September was a month from when we saw a major decline all the way to 10,300. This is the bar you can see, the anchor column. This anchor column will be, the peak will act as the next resistance for Nifty once 10,940, 970 is taken out. Be watchful. So much bias lopsidedly placed in favor of bears. I think I would not trade a bearish position at this juncture. I will wait for the confirmation to happen before I initiate a bearish trade on the overall market. Now, what's driving the market? People are saying everything is selective. So let's look at some of the components of Nifty. Let's take a favorite component of Nifty, Larsen and Tubro. And see, this is what exactly the chart of Larsen and Tubro looks like. You had a good move to 1450, 1455 in the month of February this year. From there, it cracked all the way up to 1198 on the lower side in the month of October, and now it is again come back and it's trading at 1439. Now, after a period of nearly 10 months, we are approaching the previous peak. We will call it a double top breakout, but this double top breakout can be of very strong proposition. Let's take a simple horizontal count to measure what can be the probable outcome of this double top breakout. A small double top breakout has already happened here. Sorry, the horizontal count got connected the two wrong bars. 1541 is the minimum target for this move once 1450 is taken out. That's a good 7% move on Larsen and Tobro. If Larsen and Tubro, which is an old which represents the old economy, is showing for a breakout up to 1545, obviously it means it would have a big role in pulling the Nifty up. So what else? Have a look at ITC, another index major. It's been fairly I'll here take your permission and change the box sizes. It's been fairly trading sideways to downwards in the since last July 2017. I think trend lines would be a more apt tool here. Trading range bound between the congestions. On the upside, you have 341, which came as a resistance and which became a resistance later on in July 2017, and then on the downside, you had 251, which was seen in December 17. Gradually making higher bottoms. One anchor column here, one anchor column here, slowly trying to build up a move, another anchor column which defeated the purpose of this one. And now we are coming into range shortening. What is this shortened range? Let's have a look. In the short run, we observe that ITC has been finding it difficult to breach above 288, and on the downside, every time it comes towards 260-65, there is a support available. So in the short run, once 288 is taken out, I think that would leave the scope for a retest at the upper end of this congestion range. The 309 can be a good move, provided 288 is taken out. So then comes to then we come to the third stock in the Nifty basket, which is showing good signs of an up move building, HDFC. Recently, in the month of August to October, we had a lot of fears in the market, especially in the bond markets, suggesting that there is a crunch of cash liquidity available. We had a case where LIC Housing Finance, Can Bank, Canton Homes, Repco Finance, DHFL, Rias Bank, all these corrected sharply and significant by in excess of 40% in a very short period of time. But one stock which stood onslaught of a HFC correction in the recent past was HDFC. We had a peak made around 2030 levels in July 2018. It corrected to 1660, 1670, and now it's back, making a small triple top buy here. Still not yet out of the woods, I would say. People have to wait for their confirmations to come. But this is looking excellent on charts if you ask us as a personal opinion. I tend to get my horizontal counts wrong usually, so don't mind. Giving us a target of 2160. Now, this HDFC has got a considerable weightage on the index, just like their PUs of ITC or the first stock which we saw. It's a good move. The risk is 1906, so 80 rupees is the risk you have, and approximately 200 rupees is on the upside you have as a potential. But that's not the case. Also, what has to one remember that given that the entire market is not very comfortable buying housing finance companies because of issues related to liquidity crisis or their ability to repay and whatnot. Rumor mongers have been having a field day for last 3 months. HDFC fits into the bill of people who don't want their stocks to be in any kind of a problem. Good quality paper, good management. These are the qualities people look in times when things are tough. So the people who are exiting, the likes of Canfin Homes, Repco Home Finance, or for that matter, DHFL, where will they park their money if they want to invest in housing finance? I think HDFC will be a preferred choice. We move to the next stock, which is even giving a similar kind of a signal. The other twin, HDFC Bank. See, a small breakout already has happened and it's gradually moving up. Worth watching. Yes, one may use a bit of vertical count That gives a good potential upside up to 23, 20, 25, 60. Currently trading at 22.20, it's got around close to a 10 to 15% kind of an uptick, which is slowly building up. Why one should look at this stock? People will usually look at an HDFC bank purely because of the kind of risks other private banks like Yes Bank, IndusInd Bank, Kotak Bank, Kotak Bank, because of consistent denials and rumors about somebody buying a stake or not buying a stake. People don't want uncertainty in equities. Lesser returns, but they can live, they would prefer to live without uncertainty. So that is why I believe HDFC and HDFC Bank will do relatively well compared to their other counterparts. It's not like others are going to go down and this two stock will go up. Others will comparatively perform lower than these two. Another stock which comes to our mind to discuss here is the Unilever. One of the few stocks which has gone on to clear its highs of September, August 2018. It made a high then at 1790. This time it has gone all the way to make a high at 1856. Yes, it's undergoing a small correction, but I believe by 1790 the correction should be over. The previous peak should now start acting as a support. Another stock which has withstood the onslaught of a decline from August in the Nifty is Wipro. I find it interesting. I would just increase the box size for better viewing. One top 333 2015, second near top 329 2018 January, third 2333 in 2018 September, and now this time it's finally broken it. I wish it could give you any more chances. People are looking to buy it at decline, but the declines just don't seem to be stabilizing at lower levels. The stock continuously bounces back to 330, 340 range. Good idea would be to close all longs, close all shorts, or initiate new longs by the time the stock price crosses around 350 or so. It's a good 3-4% from where it's trading, or 6% from where it's trading. Do it, and then you can enjoy the rally, which can be a breakout after a 3-year plus period of consolidation. God only knows, a 35-40% upside in a 1 year cannot be ruled out. The next name which we would like to choose here is Tata Steel. Shown a lot of resilience. It's corrected from 800 to back to 300, but slowly we see some amount of stability coming in at 500. Yes, it may not be a trading bet, and one will have to accumulate here and keep a stop tightly at just below 500, 465, 470. But once it crosses 566, 577, it's a straight home run. How can one ignore or forget the industry leader Reliance? After an amazing move over the last couple of years, when the stock literally doubled from the lows of 400 in 2015, it has moved all the way to 1300 in 2018. It's taking a breather, it's consolidating. Immediate short-term resistance is placed at around 1160, 1170. Once it crosses it, I think a revisit of the previous high can be in the asking. So let's build a broader picture that if Reliance, ITC, Lever, HDFC Twins, Wipro, Larsen, and why not throw in a couple of more names here in the Bajaj Finance, Bajaj Finserv, Axis Bank. See the congestion in Axis Bank. It's been trading sideways between 640 and It's tested near that level on 4 occasions in the last 3 years. It's trading at 625, 642 and above. Again, Axis Bank is something which has got reasonable weightage on the index. So these are the stocks which we believe will propel the index to a new high. 11,760, the previous high. Let me reiterate, it is not a target, it's a milestone. We are still in an uptrend and new milestones will be kept on adding in 2019. If you're trading shorts, these are the ones which will trap your shorts. So that's it from our side. Thank you. Thanks for watching.